Welcome to the Swing Trading with Cycles channel. We're going to do our update on Dixie today, and if we have time, we'll also look at yields. It's March 26th, 2023. This is our weekend update, and we have a pretty simple setup here. The presumption is that we are in weekly cycle decline. So, and always take a look at the pinned comment so you can see previous videos. You can also see reviews of other asset classes. We review just about every asset class here. Everything is organized by playlist. And it looks like we have a potential weekly cycle high here on week 5. So that happened the week of March 6th. And that would be the DCH of the last daily cycle. And we'll look at that. We'll look at the daily charts. But we're starting on the weekly chart here. And this is important because remember, this weekly cycle high here is also the 3-year cycle high. So as of this candle, once we went below the low of this candle, created a swing high, we started a downtrend. That is the early part of the 3-year cycle decline. Now, we wouldn't expect that low until early 2024, which, as I've been saying, would mean obviously a very bearish 2023 for the Dixie. And so we had this like really long decline into a week 35 low, and we finally started a little rally that has peaked out on week 5 so far. That can obviously change, but think about that. The same way that this candle became a swing high once we went below the low of that candle, the same thing has happened here. You see that? We closed below that low last week, and then this week that just happened, that just came up, we actually made another lower low on the weekly chart. Now that said, we did rebound a bit. So, you know, this lower wick is always a rally on a high, on a lower wick, is always a rally on a lower time frame. And we'll look at the daily chart again. It's because I'll say we probably started a new daily cycle, which makes things actually really straightforward if you know what you're looking for. Like, now is not the time to jump in and short because we just made a short-term low. So we may get a rally for another 4 or 5, for another 5, 6, maybe even 7 days before we roll over. Similar to how this weekly cycle could only rally for 5 weeks, we would expect a daily cycle isn't going to rally for many days. Again, that pinned comment is going to give you, there are a couple of videos that talk about cycles analysis and also understanding the details of swing highs and swing lows. And so, tactically speaking, next week is most likely to open as an inside week. It'll be inside the range of this this week that just closed here. So that's a high at 103.958 and a low at 101.915. So just about a $2 range. Call it from 102 to 104 basically. And so you would expect, I mean, unless obviously we could gap down or gap up and that candle opens tonight, Sunday night, but you would expect we at least start the week somewhere like here. And then it's a question of which side of the range do we break? And so if we look, and that's where the multiple time frame analysis is so critically important. So we just closed week 7, and so week 8 will be starting. So that's where we are in the weekly cycle. We're going to be in week 8 with a likely weekly cycle high, or ICH, intermediate cycle high, on week 5. And so, well, actually, let's just think about that. If we're going to have, let's just say it's a 20-week cycle. It doesn't have to be 20 weeks, but you can see we've had a 20-week cycle here. This was a little bit longer at 30. This was 20. So let's just assume 20 weeks just to give ourselves a starting point. That would mean that we wouldn't get our low until about the later part of June. And that's a 20-week cycle. It could obviously go longer. So again, that's so important to understand. If we've made our high for the weekly cycle on week 5, that means we could have easily another 15 weeks of decline or more. Now, it's not going to happen in a straight line. We are going to have, lower highs along the way. That's how a downtrend works. But that's the idea here, that we could be declining for another 15 weeks. Then we'll have another weekly cycle rally, something like looking like this, and then it rolls over again. So just not to belabor the point, but we're talking about, you had this big trend leg down. You had this, maybe you have a little wiggle up to here even. Then you come down, right? Something like that into your low for the 3-year cycle. And so these rallies are opportunities to short potentially. And again, we know the levels are very clear. We're going to have an inside week. If we look at the daily chart, here's where it gets really important. Like, this is where the multiple time frame analysis comes in, where you can kind of surround a trade, if you will. So the The daily cycle high that we were that caused the weekly cycle high on week 5 is this one here. Look at this doji like candle here on day 24. So that big decline that we saw in the weekly candle in the weekly chart, this is that same decline just represented on the daily chart, and you can see that weekly cycle low was also a daily cycle low. That's how it works. Every weekly cycle low by definition is also a daily cycle low. It has to be, right? It has to be that a lower time frame low as well. So it rallied for 24 weeks. So that 5-week rally was a 24 days. It was a 24-day rally, which is a much longer rally than these little ones that we've had that just kind of got stamped out. So that's not surprising because this was a weekly cycle low. So you'd expect that you get a right translated daily cycle as your first daily cycle. So this is actually all playing out a little bit textbook like in a way. So if you think about that, we topped out on day 24, and then we started our decline once we made a swing high below the low of this candle. Again, not to belabor the point, but like that. Once we went below that candle, that makes this candle a swing. Once we go below this low, that makes this candle a swing high. And then we're watching, is it going to come in back test and this is going to fail? Or is it going to back test and it's going to hold? And you can see we tried to come up this candle, this upper wick was just rejection. Was like we actually basically came back to the same level. You can see that. I'll just zoom in. That's why it's so important to understand what these levels are and pay attention to them in real time, because price will generally react around those levels. And so you can see, again, this is your daily chart. So that we had this ugly doji candle that made a higher high, and then the next day came in and failed, which is to say we made a lower low. We even closed below that low, you can see. And then the following day, we ended up closing below the low of that candle, but we did have a little rally on a lower time frame that came right up to this level, right around this level, I should say. And so that was another big warning sign, like, okay, we're starting our downtrend. I mean, just to be clear, you make this low, you make this high, that's a lower high. You're making this low. And so the expectation, we could even come up all the way up to here. And so just to be really clear, Friday was day one, most likely day one of a new daily cycle after a daily cycle low on day 35. And keep in mind, this was a right translated cycle. It rallied for 24 days and it only declined for 11 days because our low came on day 35. So you'd expect that this next daily cycle is going to be left translated. So it's going to rally. We would expect that it rallies for a shorter amount of time than it declines. And so how far that rally goes, who knows? But we're not expecting something that's going to rally for 24 days, for instance. Generally, in a bearish daily cycle, you could see a rally of anywhere from 6 to 10 days, let's say. And so you could see a little bit more upside here. Structurally speaking, you obviously, there's some very clear levels that stand out on this chart. And I had actually created this, so in real time, this low here, this cluster of lows here looked like it could be an early daily cycle low because you got this big bullish outside candle that formed, right? And then price actually consolidated inside that range for almost 3 days. Like you can see that. That's what these lines are, right? It's just the range of this candle. So next day it consolidated. Following day, it actually made a lower low, but still stayed inside this range. So there was some hope. Then it made a lower low, closed outside the range, and then we've come down. And what have we done now? We've tested the underside of this range. So you're going to want to pay attention to the 103 spot 443. A move above that tells you, okay, maybe we even test the higher end of this range at 105, something like that. All of that is still really bearish when you think about the fact that we're still well below weekly swing highs. So you could see a move all the way up to call it 105, and it could still be bearish. Maybe that rolls over on day 7, day 8, and then we decline for another 15, 20 days. And most importantly, we continue that weekly cycle decline as we talked about, potential low around late June, let's call it. And let's look at the monthly chart. So that weekly swing high that we talked about, this is the monthly version of it. It happened in September. That's not a coincidence that the 8-year cycle low also in September, right? So you get the Dixie high in September for the 3-year cycle, and you get the 8-year cycle low for gold. Not again, I don't think that's a coincidence. If you look at the structure of this chart, this is shaping up to be a lower high here, right? So just to be clear, we had this massive rally for the 3-year cycle, right? So that's your, from here to here. And then we've come down, we've started the daily cycle, the weekly cycle decline. At some point, we're going to have lower highs, right? Like this was probably one of those lower highs to make a lower low, maybe get another lower high, and then your final sort of flush lower. So this is just the same view that we looked at on the weekly chart. This is obviously on the monthly. And so that's the why multiple time frame analysis is so crucial. So that high came on month 20. This is currently month 26. A 3-year cycle is generally somewhere around 35 to 37 months. It's not going to be exactly 3 years. Sometimes it's a little shorter than that. Sometimes it's longer. The point is, if we're on month 26, it tells you we've got more wood to chop, right? Like we could get a really, really early weekly 3-year cycle low again, for sure. Price would make that very clear. Right now, this is looking again more like this bullish green candle for February. Looks like it was shaping up to just be a lower high within this larger downtrend to set up lower lows. So that's the Dixie picture. Let's quickly take a look at some yields here. We'll look at the 30-year and the 10. Okay, so let's take a look at TLT, because since that's pretty actionable, that tracks the 30-year. We'll also look at the 30-year itself, and we'll look at the 10-year. So this thing has been a little bit frustrating, but that's the point of price action, to keep you away from to keep you from big drawdowns, right? And also to keep you out of sort of sideways chop where it's just kind of random. And again, that's where you can lose money. Maybe not big drawdowns, but it's certainly a waste of mental capital, let's say. I mean, just if you look at this chart just really quickly, I'll actually get rid of the drawings. Look at this, like it's like a sine wave. I mean, this is ugly. Like who wants, like, I mean, that said, if you're expecting a trending move, this sucked. If you were expecting a trading range, then it could be great. You're expecting to sell around here where you've kind of triple topped basically. But let's put those drawings back on. And if we think about the daily cycle context, we had this big gap down that then just kind of violently reversed. So that was your daily cycle low on day 43, very clear. But the fly in the ointment is that we have what appears to be a daily cycle high on day 7. And I tweeted about this, but notice what's happened since that daily cycle high on day 7. So the following, let's zoom in. So that's this here. That's your day 7, potential daily cycle high, I should say. We had this move lower that was continuation. It was a follow through. It even closed below this low. So that's interesting. And then we gap up, but then we can't really hold it. And we close red. And then we have this we have this bearish outside candle on red, but doesn't really go anywhere. So all that to say, so after this lower low, we then kind of bounce up and then we consolidate for 1 day, 2 days, 3 days, 4 days. So this is 4 days consolidating in essentially the exact same range. Then we break lower and it's like, okay, maybe this thing is finally going to get flush. And then it's like, no, I'm not. So all that to say, I mean, look at this cluster, 1, 2, 3, 4, 5, 6, 7, 8 days. And all of that chop and churn has taken us to day 16. So if you're paying attention, if we rallied for 7 days and we're now on day 16, that means there's been 11 days since the rally kind of sort of stalled. Now, we're not in a very clear downtrend. Again, we're just consolidating here. And you can argue, in fact, that this is a bull flag off of this move, right? Like you can just, this is definitely, right? You can argue that this is just a bull flag waiting to make a move up like that. And that could be how it plays out. Let's see. That said, you have these gaps below, which are very ominous, right? And look, we flirted with them, right? So you have this gap below, and then below here, you have this gap that was left below by this daily cycle high. So you want to be careful of that. And the weekly chart, as it often does, maybe can provide a little bit more clarity. Let's turn this back to light mode. Right, so this weekly chart, so you had this high on week 6, and I think that's still your high, 109.68, 109.35, 109.10. So this high was lower than this high, and this high is lower than that high. That's not a good sign. So if that's week 6, let's see, what is the full count? So that would put us on week 21 we just finished, and just an ugly inside week. So all that chopping around on the daily, that's what this does. You end up with an ugly doji that's an inside week of another doji, essentially. So that puts us at week 20, and so far the high has been on week 6. So this is where things get complex. You could see a world where this actually does make a new high for this daily cycle and actually pops above this high here, right? So essentially you get a new weekly cycle high, like on week 21, let's say next week, or week 22 even. But then you could see a pretty big collapse. So essentially a false breakout. You want to be mindful of that. And of course, obviously the more direct path is this move lower. And of course, there's the bullish reaction where we just zoom up and we never kind of look back. But obviously right now, this has been just an incredible chop zone. Let's look at the yields themselves actually. Let's see if that's revealing anything to us. We'll go back to dark mode because I think that is configured for that. So we'll do the 30-year. Oof, this thing looks like death. And so, of course, this is the inverse. This is the yield. So as this goes low, as the yield goes lower, TLT goes higher. And so you can see this is kind of bear flagging. So this is another clue here. That's interesting. And you've got this like little double bottom here that if this thing broke below 3.491, that could really kind of open the floodgates. But this has the look of something that's rolled over after this move here. So what is that? Like if we say that was our daily cycle, so that would be a high on day 30. And this thing can have really long daily cycles. So that's an important one, like 80 days in that neighborhood. So a day 30 high could actually still be pretty left translated. And what day would that put us on here? So technically that would make this day 46 if this isn't your daily cycle low here, which would be pretty early. So day 46. So a little complex here. That's your daily chart. What does the weekly look like? Is that more obvious? Right. So the weekly chart. So this is telling you if this was your weekly cycle low here, and this must be from the daily chart. I'll remove that on the weekly. So if this was your daily cycle, your weekly cycle low here, that means we've made a new high on week 12 and it's currently week 15. So that actually makes things a little bit more clear that this is suggesting that the yield, again, so this is the yield for the 30-year treasury, is actually in weekly cycle decline, which would imply that TLT is actually which would imply upside for TLT because this moves inverse to TLT. So this is going to be an interesting one to watch to be sure. But still, again, same kind of sideways chop sort of situation as TLT, just doing it from the other side of it essentially. So we're going to have to wait and see what this thing decides it wants to do. And let's look at the 10-year really quickly. What's that doing? Is that oh, actually that's the inversion. That's not what I meant to do. Here's your 10-year. So the 10-year looks more clear that this thing is in weekly cycle decline. You'll see we're breaching these. Wow. So we flirted with that previous low here, but this is clearly pretty. This is a pretty likely weekly cycle high here, and so again, that all bodes potentially bullish for TLT, but we're gonna just have to see if it can break out of that sort of sine wave sort of S curve pattern kind of thing. And let's look at the monthly charts on these actually. That's always helpful to see. Yeah. So on the monthly chart, we have a bearish outside monthly candle, which is trying to rally a little bit. This is your 10-year yield. Right. So this may be telling you where the 30-year is going. So the 30-year is staying above those lows, but maybe it can't do that for much longer. And you can see this thing has been trading inside a range. You could say this was a little false breakout that suggests we spill over outside of this. And clearly the pivot that it wants to reach out to is, I mean, it seems insane. That's all the way down at 2.515, but that's certainly something that people wouldn't be prepared for, I guess I would say. So that's your update on Dixie. Also, we looked at yields for a little bit. It's going to be really interesting market action over the next, call it 2 to 3 months. And the last thing I'll say is you can see Dixie seasonality. This is UUP as a proxy for Dixie. Tends to be red for April, only a 31% chance of being positive. So that also tells you, it's very likely that we are moving into that weekly cycle decline, which it seems like yields are just going in the opposite direction. I guess let's take a quick look at TL. So it's obviously been a crazy, like a historic year, and we had a really bad year for bonds last year. So you could say the seasonality stuff just isn't as applicable. But just for what it's worth, there's no real edge over the next few months, right? It's like just in the mid 50s in terms of your win rate. Your really ugly months tend to be September and October, and we're actually just coming off of February not being a super positive month, but not by a whole lot. So no huge edge here. July does seem to be a standout here in terms of upside. So that is your update on Dixie plus yields. Headline: Dixie 3-year cycle decline. There's no reason why we would expect not to have a left translated weekly cycle if we're in the 3-year cycle decline. That's one of the simplest ways to think about it, right? Like if this is the 3-year cycle decline, then it means by definition we're going to have weekly cycles that top out around week 5, week 6, week 7. So this would be consistent with what you would expect for a 3-year cycle decline. So that's our update. Thanks for watching.